I'm looking at financial markets. I'm looking at the macro backdrop, and I'm just saying, hey, they've got to print. Like they're at the point now where they got to really kind of turn on the printing press. I don't know if it happens. It's going to happen in like the next 6 months.
Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FITSCRIPT. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan, nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FITSCRIPT and see what's possible. You opted out of the broken financial system by adopting Bitcoin and taking self-custody of your money. But protecting your wealth is only part of the equation. Now it's time to protect your freedom. My family is stacking sats and stacking flags. A second passport is our hedge against government overreach and uncertainty. If you're a Bitcoiner looking for your exit strategy, our friends at Citizen X will help you secure second citizenship through investment or descent. Book your free call today by hitting the link in the show notes or simply scanning the QR code on the screen. What are the things you're seeing that are giving you those red flags? Like what's popping out at you?
You know what's really interesting is you're at all-time market highs right now, and in equity indices. And but I think if you did a poll and you kind of looked across just the broader economy, middle class to lower class within the U.S., and people are hurting like really bad. Like they just don't have a disposable income. They don't have the ability to kind of really do too much. I'm looking at just where the treasury's at. I don't know if you saw Bessett's comment recently.
I did. So I've seen like isn't the long-term treasuries, they're not looking so hot. And then I don't know what Bessett said.
Yeah, all 30-year bonds are in a massive sell-off globally. It doesn't matter which developed economy you're looking at, they're selling off like crazy. They're saying they're going to drop interest rates in the next, and that's going to be an interesting thing for people. Is I suspect the 30 years are just going to continue to sell off, and the yields are going to go higher and higher, even though they're dropping rates on the short end of the curve, which is what they control. Like the overnight money rate is going flat or down. So it's kind of like
I have a question to throw in here. So when you're talking long duration treasuries, long duration bonds, so 30 years, somebody is effectively lending their dollars to their local government, and they're saying in 30 years, I get back my money plus X percentage.
Yeah.
And they're trying to sell these, but when they can't sell them at a certain interest rate, they're forced to basically on the market sell them with a higher interest rate, which is problematic because then the debt repayment that the government has to do goes up. How is that? Can you describe a little bit of the situation?
The easiest way I would describe this is if a 30-year bond is yielding 5 or 6%, and that's the interest rate that you're going to get, and you buy that thing and you hold it for the 30 years, and they're debasing the money at 10%. In real terms, you're losing 5% a year.
Yeah,
like in buying power. So if you take that 5%, I could use easier numbers like 7%, then half of the value is gone in what would that be, 10 years?
Yeah.
So after 20 years, that half is now 25%, right? And then that 25% is 12.5% by the time it actually matures after 30 years. So these numbers are crazy for anybody that's trying to store and preserve buying power in these types of instruments when the debasement rate is that much different from what they're currently yielding. And the government's trying to keep the yields flat or lower. So good luck.
Yeah. Yeah. So you've got, and you said this is not specifically the US. This is a global phenomenon right now.
Yeah. Yeah. This is a global, I don't know if you can find, James Lavish just tweeted something out this afternoon that shows 30 years. Yeah, if you pull up his account and can show that, but that just shows you all the yields on 30-year bonds are selling off like crazy, which means nobody wants to own it because nobody thinks that the inflation rate, the debasement rate is going to be able to keep pace versus the yield. So they're selling off and chasing. There you go. There's the chart.
This one
And
here.
each one of those lines are a different country. So you got Japan, Germany, US, and the UK, and you can see how they're all going higher. In the UK, they're approaching 6%. In the US, they're right at 5%. And as we all know, the M2 growth rate is around 8 to 10%.
Yeah.
So the real difference here is everybody's losing 5% of their buying power if you're in the US and in the UK, which that's absolutely terrible.
Yeah.
Who wants to store their buying power? And the opportunity cost is Bitcoin.
Yeah.
And this goes to the preferreds that Michael's issuing at 10%. And it's like, would you want to own that, which is fully backed and fully collateralized by Bitcoin 5 times over? Or do you want to own this thing that the government's going to debase, even worse? And that's assuming they keep it at 10%. It might go to 15 or 20%. You got 30 years to figure it out. Good luck.
So I mean, people are understanding clearly. They're seeing the writing on the wall, like, hey, your stated inflation numbers are BS because assets are clearly that's the indicator. And so they're saying, okay, I'm getting a crap deal here. So they're fleeing to what currently? I've seen that again. Gold is on another tear.
Well, you got equities making all-time highs. So all of that fixed income capital is coming out of that market. It's going into gold. Gold's getting bid. It's going into equities, which are putting in new all-time highs. And I would argue the thing that's really confusing for people during a currency meltdown is that the stock market in that local currency terms, like if you denominate the stock market in that local currency, the stock market for profitable businesses, it goes hyperinflation too. It goes way up. But the replacement value or the new currency that supplants it, or if you're looking at it in foreign currency terms, like let's say you were looking at the Venezuelan stock market whenever the currency melted down, it would look in the local currency, it's going straight up, but in dollars, it was going down.
Mm-hmm.
And so some of these things are really hard for people to kind of wrap their head around. And that's why if you pull up and you denominate any stock in Bitcoin over 4 or 5 years, it's going down.
Yeah. Yeah. It's interesting. Even denominating the stock market in gold over the past number of decades, it looks relatively flat.
Yeah, it absolutely does.
Yeah. Now, I've got a question here. We're seeing equities, we're seeing gold. Curiously, why would you say that that real estate is not responding in kind? What is the problem there that people aren't fleeing to what traditionally would be park your money here, it's safe?
So real estate is a market that is highly dependent on location. So if you go to highly desirable locations, call it, beachfront property, you hear Michael, Saylor goes, oh, if you buy a house in the Hamptons. So you go to like some of these highly desirable locations and you're going to see that some of these places are absolutely ripping because the people that the one percenters are making tons of money in this environment. It's the same thing as a proof of stake system. If you've got all the money, it's really easy to make a lot more money. And when you go to the places where those people want to live, those real estate prices are ripping. If you go to places that are not desirable or have a declining local economy, they're going to have a really challenging situation and they're just not going to get bid. So that's a harder one to talk about because it's very nuanced. It also gets into how landlocked some of the geography is. So like you go to an island, or here's a good example. You go to Wyoming, you go out to Jackson Hole and you go skiing and you go and you look at the property prices and it's totally insane what the prices are. Well, it's because there's national parks and all this protected land. And it's almost like you're on an island there in the town of Jackson. And so what happens to all the property? Well, it's a desirable location. The land is landlocked and anybody with money likes to live there. So you see the prices get bid.
Are you seeing, I feel like there's a similar thing playing out in equities though, where the average of everything is all-time highs, but it's like the best performers that are pulling the weight. Is that true?
So the other thing that you see is the consolidation of equity. So the Mag 7 or the big guys, They're just able to, going back to a proof of stake system, and why it's a cesspool is because if you've got all the money and you hold all the chips, well, you can go out to any competitor and you can offer them some crazy price that they're going to take, because they just, they want to be rich and they want to, sunset off or just pull off into the sunset. And so then that company becomes a bigger and bigger conglomerate. So when you see a currency melting down and it's not a healthy currency and it's not pegged and it's being debased at, call it 10% annualized, what you get is a very unhealthy ecosystem with respect to businesses and the consolidation of those businesses.
And to bring it full circle back to the original topic, is this the destiny of Bitcoin? First, perhaps as consolidation of capital in things like MSTR entering the S&P 500, but then gradually a realization, hey, this is sucking up all of the capital. This is where people are parking their money for long term.
Absolutely. So what I think, people, this might be a really controversial, and I would imagine most people would not agree with this, but I think the emergence of a lot of these treasury companies, what this is you have legacy equity with a board of directors that just can't figure this out and make decisive risk-based decisions. All of their decisions are based on de-risking themselves so they can continue to make their $1 million salary and that they won't be thrown out of their seat. And therefore the board's at this stalemate. They can't make a decision on Bitcoin. If they do, they only buy a 1% position of it. And what the treasury companies are, or what they're kind of like representing, is the opposite, or the anti-impotent board. And they are going out there and they're saying, hold on, we just need to put all this buying power on the balance sheet. We don't necessarily even have to have an operating business right now. But if we stuff enough buying power onto this balance sheet, as we get to the other side of this currency meltdown, then we can buy all the products and services and assets of these other companies and strip mine these companies for what's actually valuable inside of them. And then we'll just bolt that onto our corporate entity. And so, and in the meantime, how are they making money? Well, they're making money on the arbitrage opportunity between Bitcoin's performance and the fixed income market, which is yielding nothing, or 5%, and it's getting debased. The currency is getting debased at 10%. So they're looking at that. Michael's issuing preferreds at 10%, and he's making, call it a 45% return in Bitcoin annualized according to power law for a 30 to 35% spread. Some people will say that can't persist. I think it will, because of how broke the fixed income market is.
Yeah.
And so these companies, as they're doing this, they're just going to continue to amass more and more Bitcoin onto the balance sheet. And they're going to be the ones with the real money to go and buy the real assets that actually have a competitive moat and competitive advantage on the other side of whatever this thing is.
Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.